You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 28th of March, 2016. Please forgive me if I have to clear my throat a few times. The pollen is affecting me a little bit. Let's talk about what's going on. We always jump into, and this is the way we'll do it. We'll start with our three market indexes, that is the total market, the S&P 500, and the NASDAQ 100. We'll look at gold on both the weekly and the daily charts. Then we'll talk about the things that moved the market this last week as far as news goes, and what might be happening to move the market in the coming week, beginning, of course, on Monday, excuse me, the 28th of March, 2016. Now, let's jump into what's going on with IYY. Well, we saw IYY originally cross over going up on the 4th of March on the weekly chart. It actually started going up all the way back on the 19th of February after that huge downturn in the market starting at the beginning of the year, that first week ending the 8th of January 2016. Now, what have we seen happen? Well, we've had all green up candles since that time. And we continue to see the market move up. We have the acceleration of the derivative oscillator occurring. We also have the MACD over the red signal line. We still have a good divergence there, so the market continues to go up. When we look at the latest high of highs, we see that the market, as far as the highs during the week go, about tapped out where it had been in the prior week, which could show some market slowing or just digestions of past gains. Now, let's look at the daily chart. What do we see going on throughout the course of this last short week? It began on Monday, the 21st, and of course ended early on the 23rd. We saw the week start off with a red open down candle, proceeded with a second open down candle on the 22nd, and then the acceleration of down moves on the 22nd and the 23rd. The 23rd and the 24th. So we actually crossed through on our daily chart, on our 2-day trend line there on Friday. Excuse me, and we had a crossover going down on Friday. Now, if we look from our daily chart, go back to our weekly, and we look at the S&P 500, we see it also began moving up back on the 19th of February. Some may say, well, wait a minute, why does it look a lot of times like the S&P 500 and the total market are somewhat similar? Not totally, but very close many times on the charts. Well, that is because the S&P 500 big companies, a lot of the volume of the market, but it is not the whole market. That's why we look at the market and the S&P 500 and then the NASDAQ 100 differently. What do we have going on? Well, again, it looks like it might be slowing. We still have an increase in the speed of the derivative oscillator, and the MACD and the signal line continue to diverge and keep moving up. So we do have an uptrending market on the weekly chart. If we look at the daily chart throughout the course of this short week, we see, of course, somewhat similar, well, a little different. On Monday, it was actually an up green candle on the S&P 500, unlike the total market, which was actually a red open candle that day. And then we had sort of a sideways slide on Tuesday with a red open candle, almost a spinning top, and then down moves on Wednesday and Thursday. So we had the market end down for the week. So that is where we were on the S&P 500. Again, we do have a strong upsurging market still at this point, but the daily chart short term is down. So that's where we were over the course of the week and how we open up in the new week, with the market having ended down for the week, but again, a strong upsurging weekly chart. And again, the big chart is what controls the big moves. Now let's look at our last index before we go to gold. That is the Qs, QQQ. That weekly chart, the Qs also rotated over going up back on the 19th and have continued to move up strongly, even making a higher high over the course of the last shortened week for Easter. Now, if we look on the weekly chart, what do we see having occurred during the course of the week? Well, we see that on Monday and Tuesday, the NASDAQ 100 was up. We had a doji, that is a lot of indecision. Looks like a cross, means that the market opened and closed at about the same space, and the high and the low were about equal. When we look at what happened on Thursday, we saw that the market turned over and went down. The Qs has not quite yet crossed over on the daily chart. So again, the Qs is surging upward on the big chart, but a short-term down move as we go into the next week. For the record, the total market was down 0.07% for the day on Friday, down 0.04% on the S&P 500, and up 0.03% on the daily chart for the NASDAQ 100. Now, lastly, we're going to range out to the weekly chart, and we're going to look at gold. What's going on with gold? It was down 0.24% for Friday. We do have a down week on gold, although gold is still in a long-term up move. We do see the last 2 weeks in gold, a red open candle for the week ending on the 18th of March, and a red filled-in candle. That means a strong down move for the week ending that early week on Thursday, the 24th of March. We have the derivative oscillator losing speed, and we also have the MACD moving toward the signal line, but still a large separation. But we do have gold on the weekly chart at least appear to be topping out. We do not have a confirmed down move yet because we don't have a crossover on the MACD. We'll continue to watch. Now let's see what went on with gold during the week on the daily chart. We see that gold on the 21st opened up, went down, sort of sideways on Tuesday, and then Wednesday and Thursday, lots of down moves. In fact, the real down move was on Wednesday, and then sort of mimicked, popped up and then down on Thursday. But gold confirmed down move actually on the daily chart since around the 8th of March. It's been sliding sideways and bobbing up a little bit, but trending down. That is where gold is at the end of the week. So when we open the week up, we will see, of course, gold, all the major indices pretty much moving down on the short charts, and gold, of course, as far as the weekly chart goes, gold is also, oops, I pulled up the 4-day chart. Gold is also moving down, but not yet a confirmed down on that big chart. Our other 3 indexes, of course, are still confirmed up moves on the weekly chart as depicted by the total market. Now let's talk about the things that moved the market over the last week. Well, we had a warning by 5 members of the Federal Reserve's rate setting committee saying that a hike might come as early as April. Now, of course, that's something that can affect the markets, because why have we seen the markets continue to go up when news across the world has not been that good? Terrorist events, I mean, all the things that have occurred. Well, because money is free. And when money is free and is inflating the value of everything, the stock market, which is a real source of wealth, tends to inflate itself. So if we start reeling back in that free money, you can expect to see the stock market start going down. Hasn't happened yet, but that has been talked about, so pay close attention to that. Fed futures are currently pricing in a rate hike in late 2016 to early 2017, so you better pay attention. If that rate hike comes in earlier, it's going to drastically affect the market. And if you own equities, it may very well drastically affect you. So listen out for that. It was a heavy week of Fed speak, with those 5 members of the Federal Open Market Committee saying that there might be a rate hike that they think there should be possibly a rate hike in April. Following those comments, of course, we saw things happen like the dollar strengthening as equities declined, oil prices slumped. Just remember, only 2 of those members are actually voting members on the Fed, and the last we heard from Yellen was that caution was warranted in removing any what they call monetary accommodation. You gotta love all the stuff they say, the things they try to do and say and not spook the markets. Well, pay attention, because if they do increase the federal funds rate, you're going to see the market probably hit some new lows. So just listen out, pay attention, be aware. Now, what else do we see going on? Well, we see German investor and business sentiment improved some. We see conflicting survey data muddying the economic forecast here in the U.S. We had the Philadelphia and the Richmond Fed, along with the Empire State survey, sparking hope that soft patches in manufacturing might come to an end. But at the same time, you had markets U.S. Manufacturing Purchasing Managers Index dampen some of that optimism. Economists had expected a rebound of 52.4%. It ended up being only 51%. So again, pay attention to those things. They're not going to affect the market as much as what the Fed says and or does. We also see U.S. home sales data being mixed. We saw that sales of newly constructed homes rose 2%, but at the same time, sales of existing homes fell 7.1%. You'll hear that high prices, low inventories contributed to the decline in sales of used homes. So anyway, just sort of keep a lookout for those kind of things. U.S. durable good orders fell for the third month in 4. That again is something out there just to pay attention to and listen out for. Now let's talk about what's going on this next week. Not any big Fed stuff coming out unless you have more members speak out, which is not likely, but you do have the stock exchanges in Canada, Australia, New Zealand, Europe, Australia. They're all going to be closed on Easter Monday. We're going to be open because, of course, our markets were closed on Good Friday. U.S. personal consumption expenditures, that's going to end up being released on Monday. Then you're going to see on Friday, well, let's hit Thursday first. Eurostat releases of the Eurozone Consumer Price Index. And then Friday, going to have several things happen. U.S. employment report's going to be pushed out that day, along with global purchasing managers indices, and the Bank of Japan's going to release its Tonkin report. Those things you can sort of listen for, but again, it's typically the Fed speak in this market that's going to really affect things. And we saw what happened over the course of the week with the terrorist attack in Belgium. The market adjusted that day after, then went up later. And then, of course, we saw the market moving down toward the end of the week, I would argue based maybe more on Fed speak and other concerns rather than what was going on in Europe. So it is interesting to see what's affecting the market and what is not. But again, in today's world, what's affecting it most of all is what we hear from the Fed. So pay attention to that. And again, be aware, our big indices, that is our three, the ones that we follow, our big indexes, our total market, S&P 500 and the NASDAQ 100 are all in long-term up moves on the big charts. And gold is in a long-term down move. It has not yet crossed over going down, but it has started making some adjustments. Appears to be hitting a high, but not confirmed at this point. That is where we are as we go into this next week. We'd love to hear from you. Tell us what you think, what we can do for you, any more information you need. We are here to provide our teaching and instruction services. We also have for you, you can go to our website, chartingwealth.com, sign up for our daily chart review, where we'll review all three of the indexes that we look at in gold. When you sign up, you'll also get this weekly review and forecast, as well as our How to Read a Stock Chart video, the link to that, and the link to the type of trading charting layout that we use at freestockcharts.com. And the best thing of all is that word free. All of it comes to you at no charge. Please join us at chartingwealth.com. Let us hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. You want to really help us out? Show you love us by going to iTunes, subscribing to our daily podcast, which includes our once a week podcast, and give us a 5-star rating. Say something nice about us. It would mean a lot. Thanks so much. God bless. We appreciate you being with us from chartingwealth.com.